Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin surges past $65,800 and oil plunges nearly 5% as the United States and Iran announce a peace deal to reopen the Strait of Hormuz. Meanwhile, the SEC charts a new regulatory path for tokenized securities, but questions about permanence remain. Bitcoin climbed to $65,829 this morning after President Trump announced completion of a deal with Iran that ends 3 months of military conflict. The agreement, mediated by Pakistan, immediately reopens the Strait of Hormuz and removes the U.S. naval blockade on Iranian ports. The formal signing is scheduled for June 19th in Switzerland. The peace breakthrough triggered broad risk-on sentiment across markets. Oil prices tumbled, with WTI crude falling to around $80 per barrel from peaks above $110. Ethereum rose to $1,736, while XRP gained to $1.20. Asian stocks jumped over 3%, but traders remain cautious. 2 previous ceasefires collapsed in April and earlier this month, and Bitcoin gave back full relief rallies both times. Trump warned he could restart strikes if nuclear talks fail. Analysts note that central bank policy responses to lower oil prices may matter more for crypto than geopolitics. Cheaper energy reduces inflation pressure, potentially keeping the Fed on hold. Speaking of central banks, the Bank of Japan's rate decision Tuesday carries outsized importance for crypto markets. The BOJ is expected to raise rates from 0.75% to 1%. The concern is massive speculative short positions in the yen, now at 9-year highs. If the BOJ hikes and signals further tightening, those shorts could unwind violently, hurting yen-funded carry trades that support risk assets including crypto. A similar setup preceded last July's rate hike, when Bitcoin plunged from $65,000 to $50,000 within a week. In regulatory news, the SEC is preparing to use exemptive authority to grant temporary relief for tokenizing securities like company stocks on blockchains. Chairman Paul Atkins described this innovation exemption as limited in time and scope. Former SEC lawyers noted exemptions carry less weight than formal rules, but would be difficult to reverse once products launch. Ashley Ebersole, former SEC senior counsel, stated legislation remains the only way to obtain the permanence some players demand. The push comes as tokenized U.S. Treasury markets exploded from $750 million in early 2024 to over $15 billion by last month. Good news for Bitcoin sentiment. U.S. spot Bitcoin ETFs snapped a 5-day outflow streak Friday with $85.8 million in net inflows. BlackRock's IBIT led with $35 million, while Fidelity added $42 million. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.